Okay, educational incentives. Again, lots of nice little stuff that we have here. Again, a lot of information coming to you. Basically, it is just a lot of information. First thing that we hit is QTPs, or better known as Qualified Tuition Programs. Basically, this allows taxpayers to meet qualified higher education expenses by either buying in-kind tuition credits or certifications, or contribute to an established savings type account. Again, not much of a taxable item. It's just a good information to know about if you kind of want to know about starting a qualified tuition program. Again, we would talk to a financial planner. They can help more with this part. Again, distributions are tax-free if used for qualified higher education expenses. That's the key. So, this includes tuition and fees, books and equipment, supplies, books and supplies, equipment, and then reasonable room and board costs. Now, this again is subject to certain limitations depending on the QTP program. So, with this, mostly if it's the dorm room, it's going to pretty much be covered. But if it's an apartment, you may be looking at different items. So, again, as long as it's for qualified higher education expenses. Now, qualified higher education expenses also includes tuition in connection with enrollment or attendance at an elementary or secondary public, private, or religious school. Now, however, the use of the specific term tuition excludes other types of qualified education expenses such as books, supply, and equipment for elementary or secondary students. Basically, you just get to pay what it costs to actually go there. Now, maximum exclusion for elementary or secondary education is $10,000 per beneficiary per year. It's nice. It's always good to start a QTP. Now, if it's not used for purposes outlined, this is a big key. The distributions are taxable and subject to a 10% early withdrawal penalty. So, again, we really look, and the people that, whichever company you use the program with, they really look into what you're using it for. And as tax professionals, we have to do it as well, because in case of an audit, we want to prove that we've asked the necessary questions, especially when it's related to some of these educational incentives. Now, again, because we don't know about the QTP, the annual contribution amounts will vary. However, contributions are not deductible. Okay? Any contributions are known as gifts and thus are subject to gift tax rules, which again, if I remember right, was Form 990. It's been a while since I've done a gift tax. Now, taxpayers that may claim the American Opportunity Credit or a Lifetime Learning Credit, and we're going to talk about those credits later on in this course, in the same year as distribution taken from a QTP on behalf of the same student, as long as the distribution not used for the same expenses for which an education credit was claimed. Okay, so you can't use it for both on tuition. Simple as that. So the credit only gets to claim on certain things. Must also reduce qualified higher education expenses excluded from income by scholarships, veteran benefits, and so forth and so on. That helps out with higher education. Yay, QTPs. They have some good benefits, but a lot of restrictions. Alright, here's another fun one. The ESA, the Educational Savings Accounts. Okay, we've seen this pop up a couple of times in Chapter 2, but basically this is it. Taxpayers are allowed to set up educational savings accounts to pay for qualified education expenses. Yes, these are great savings accounts. QTPs and ESAs, they are great. Again, I would personally talk to a financial planner to make sure you're doing the right account. It's good for any child. Alright, so when we got these contributions to educational savings accounts, they are limited to $2,000 per beneficiary per year. Okay, that's contributions. They are not deductible, so you cannot deduct these from your taxes. And they're subject to income limits. Cannot be made once beneficiary reaches 18 years old. Okay, so we can contribute up to then. And cannot be made in the same year as a QTP contribution to the beneficiary. Okay, so again, a lot of restrictions. And then they're actually phased out between adjusted gross incomes of $95,000 and $110,000 for single, and $190,000 to $220,000 for married couples who file jointly. All this means is that limit of $2,000 will reduce if we make more money. If we make over $95,000, it will slowly reduce till zero when we reach $110,000. Same thing with married. That's all it's really talking about. That's our classic phase outs. Okay. Now, distributions are tax-free if used for qualified education expenses for college and private elementary and secondary schools, similar to the QTP. Now, qualified education expense again is tuition and fees, books and supplies, equipment, and then there's room and board. If student course load is at least 50% of full-time course load. Basically having classes for more than 5 months. So it's not talking about full-time as in 12 classes. It's usually when they talk about full-time, it's about 5 months. You're actually taking classes 5 whole months. If distributions received during a tax year exceed qualified education expenses, part of the distribution will be taxable income. Okay, so again, simple enough. We know we can basically tax-free for these expenses, but if we receive more money, we are considering that as taxable income. So distribution is presumed to be pro rata from each category. Told you this is going to be fun. I told you. Lots of information on these educational incentives. Again, a lot of restrictions. So now we have the higher education expense deduction. Okay. So this one is kind of here with us, but it's also kind of gone. The deduction was expired at the end of 2017. It did have to be restored retroactively through the end of 2020. Okay. All this really is that in 2017, taxpayers were allowed an above-the-line deduction for qualified tuition and related expenses incurred during a tax year. So $4,000 for single and head of household taxpayers with modified AGI below $65,000. $4,000 for married joint filing if the modified AGI was below 130. $2,000 for single taxpayers with modified AGI, and $2,000 for married joint filers with modified AGI between such and such. Again, this one we don't actually, I didn't hear if it got expanded again, so we're pretty much saying that 2020, this is the last tax year that's going to deal with a higher education expense deduction. Again, this will be more automatically. Okay, so this concludes a lot of information over different educational incentives for this part. I know it's a lot of reading, or actually information, but really, it's some nice stuff. The key thing again is that you make sure that if you do open a QTP or an ESA, that you make sure that any distributions is school related, especially for tuition. Okay? And of course, our higher education expense above the line deduction is for any qualified tuition and related expenses incurred during that tax year. So again, books and supplies, probably going to be it. Okay? So if you have any questions about education, just let me know, and I'll get back to y'all for the next little part, which is not much left to this chapter.